Alright guys, welcome to this lesson on Doji. This will be the part 1 of the Doji lesson. Okay, so let's get into that right now. Basically, what is a Doji? Now, Doji is a candlestick pattern that looks like this. So you have an opening and closing price at the same level. Upper wick and then lower wick has to be the same length. Ideally, the price closes near or right at the open price. And you can find this pattern in a bullish and also bearish market, but it is more effective if you find it in a bullish market, particularly if it forms at the end of the trend and also at critical levels. So when you see this pattern, it tells you that buyers and sellers are indecisive and uncertain. So you need to look at what appears in the next candle after the Doji to tell you that which direction is going to come. So if after the Doji pattern is a bullish candlestick pattern or bullish candle, then high chance the price is going to continue to go up. But also it depends on the context. So basically it tells you that price is going to reverse, but it doesn't tell you how far the price is going to reverse. So if you want to know how far the price is going to reverse, then of course you need a lot more confirmation indicators. So it is useful if you find it in a trending market. If you find it in a ranging or volatile market, then it's not going to work out so well. So you need additional technical indicators for you to determine when to get out and also where to cut your losses. And you can use it in a double or triple candlestick pattern. For example, the bullish army cross or bearish army cross. If you haven't went through the lesson, in the next few lessons, I'm going to talk more about all these patterns. And this can either be a bearish or bullish signal, depending on what the next candle is, and also depending on what the trend that the Doji appears. Does it appear in a bullish trend or bearish trend? So if I'm to ask you, based on these two patterns, which one is stronger? The first one or the second one? The answer would be the first one, because longer wicks indicate higher indecision. Okay, shorter wicks indicate very little indecision. So if I'm to ask you, these two patterns, which one is stronger? So you can see that the candle size is the same overall. From the high to the low is the same. Okay, but the difference is that the upper wick is longer for this one and the lower wick is shorter for this one. Whereas for the first pattern, the upper wick is the same length as the lower wick. So which one is stronger? The answer would be the first one. Okay, this pattern will be stronger than this pattern. Why is that? Ideally, like I said, you want the upper wick to be the same length as the lower wick, not too much of a difference. Because the truth is that when it comes to the forex market, very seldom you see the Doji would have an upper wick that is exactly the same length as the lower wick. Sometimes you see the upper wick being slightly longer than the lower wick. Sometimes you see it being a lot longer than the lower wick. So a lot of times it is not ideal. But as you know that when you see the body being lower than the middle point, then this is more of a bearish signal, because sellers have to push the price all the way down here and then close down here, right? But if it appears slightly above the midpoint, it is more of a bullish signal, because buyers have to push the price all the way up here. So the thing is, how do you determine if the shadow wick is long or not? Because length is quite subjective and is quite relative. You need to compare the length of the shadows as compared to the previous candles. So if you see that the previous candles are very, very small with very small wicks, then you can say that, okay, this candlestick pattern is very long in a way, or very strong. Okay, so it depends on the previous candles. It's all relative. Now this is in comparison with Doji, but how about if you compare it with other patterns? Which one is stronger? And assuming that all factors remain the same, okay, all factors, context remain the same, Doji would be the strongest, followed by Marubozu, which is the big, long candlestick pattern with large body, hammer, shooting star, inverted hammer, then followed by bullish engulfing and bearish engulfing, And then the least strong out of these 5 would be bullish Harmy and bearish Harmy. Okay, but that doesn't mean that you should completely ignore it, because it is still a pretty significant candlestick pattern. But of course, at the end of the day, you don't really need to memorize this, because it depends on context. Okay, because if bullish Harmy appears at the right context, but doji appears at a random place, then in this case, bullish Harmy will be stronger than doji. So some of the factors that would increase the significance, increase the strength of doji: small body, preferably just a straight line, meaning that opening and closing price is the same. Okay, like I said, long wick. And also, if more than one doji is being formed, let's say you see a triple doji consecutively, not separately but consecutively, then it increases the chances that a reversal is going to come. Fourth thing, must be formed at key critical levels. For example, if you see it on top of a support resistance, moving average or trend line, also if it appears at the end of the trend, and also if it is formed after a strong bullish or bearish candlestick. And also if the next candle confirms the reversal, then it's going to increase the strength. So for example, if you see a doji at the end of a bearish trend, and then the next candle that comes is a bullish candlestick pattern or bullish candle, okay, this is a confirmation that the trend is going to end, that there is going to be a reversal that is coming up. So for example, can you spot where the doji is? Now you can see a couple of not so ideal ones. The first one is over here. Okay, lower wick is longer than upper wick. It appears at a random place. It's not testing any levels. Same thing for this doji. Just appears out of nowhere at a random place. And the size is pretty small as compared to the previous candles. And the next candle that appears after the doji is a bullish candle and a bullish signal. So we are in a downtrend. We are looking for a sell, so we ignore that. Again, this doji over here, it looks pretty ideal, but the wicks are a little bit short, so the signal wouldn't be that strong. And the next candlestick that forms is a green candle, so again we are going to ignore that. What we want is a red candle, okay, because it kind of tests this 50 SMA. So which doji in this case gives us a signal, a good signal? Example over here. Okay, this doji, you can see that it tests this support over here, and the next candle that forms is a bullish signal. Okay, so high chance you know that price would very likely bounce off from here. And moreover, your 50 SMA is starting to converge and slope upwards to cross above the 100 SMA. Again, you see one more doji over here doesn't mean anything. One more over here doesn't mean anything as well. So remember, context is very important. Doesn't mean that when you see a doji, example over here, then you should sell. If you sell over here, look at where the price when it went up. Price went up over here. You see a doji, do you want to sell here? If you sell here, you put a stop loss up here, you get stopped out. But you see a doji over here, wait for next candle to confirm. This is a bullish candlestick signal. Put a stop loss over here. Then you can kind of pick tops and bottoms from this trade. Okay, another example. Now this is more of a bullish trend. Price comes over here and a couple of doji is formed, which increases the strength. One more doji over here. The next candle that forms, bearish signal, and the price drop from there. Doji over here, bearish candlestick signal, doesn't really give us any trade signals. Two more dojis over here, appears at a random place, so no trades for now. You can see this resistance I drew based on this point, okay? And then all of a sudden there's a breakout. Should you trade this breakout? Now you can see that when the price broke this resistance, it's a doji, which tells you that the price is going to U-turn. So when the price comes up here, and it tells you that, hey, we're going to U-turn from here, are you still going to buy because of this breakout? So you can tell that this is a false breakout. And confirm this with the next candle that appears, a bearish candle, you know that this is a false breakout. Okay? So you can see price came back down from there. So in a way you can use dojis to also spot false breakouts. So it's going to help you avoid making some stupid trades. Okay, so right now I'm gonna give you a couple of case studies. So let's spot where the doji is. So you can see one over here. And always when you're looking at the doji, look at where it is at the trend and also what the next candlestick is as a confirmation. So as you can see, the price comes down and the doji is formed. This is not super ideal, but it's still a doji. And the next candle that forms is a bearish candlestick pattern, so it cancels out this indecision over here. And then another doji forms, so you expect price to go up. So wait for a bullish candle which appears later on over here, and you can see price went up afterwards. And you can actually draw a small trend line over here. Okay, it's not straight, but the price tested a couple of points over here, and over here. And when you see a doji at the end of a downtrend, very high chance the trend is going to end. Of course, you need a confirmation in trendline break for you to say that the trend has ended. Okay, another example over here. This one's an uptrend. So there are a couple of confirmations that you can use to tell whether the trend is ending. So for example, if you see a massive bullish candle for an uptrend and then followed by a doji, then this increases the chance that this is at the end of the trend. Okay, but with that said, 50 SMA already gave you the signal, so if you want to take this signal, feel free to do that. But you can see a couple of big bullish candles over here, one over here and one over here. So traders will start to take profit when you see all these big bullish candles. And in fact, price is testing a resistance zone over here. Okay, and this doji is formed, and the candle that appears afterwards is a bearish candlestick pattern. More or less you can say that, okay, based on all these confirmations, the trend is going to end. Okay, another example over here. Again, you see a doji over here, and before that there's a big push up in price. Okay, buyers are starting to come in, and when you see big bullish candles followed by doji, traders would start to take profit. Okay, and moreover, at this point in time, your CCI gave you an overbought signal, and after doji appears, there's a small bullish candle, then after that followed by consecutive big bearish candles. So these are some of the clues that tell you that the trend is going to end. And in this case, our MAs gave a later signal and our price action gave us an earlier signal. Now the thing is, does a doji works better in an uptrend or downtrend? It works on both uptrends and downtrends, but it would work better as a reversal pattern in an uptrend. Okay, but that doesn't mean that you need to ignore dojis when you see it at the end of a downtrend. So you can see that in this case, you have, I think, two dojis over here, which shows that traders are very indecisive, and then all of a sudden a bullish candlestick pattern forms, and this kind of gives you a clue that the bearish trend has ended. And moreover, CCI went to massively oversold level over here. Of course, you need a trendline break confirmation for you to say that the trend has officially ended. And moreover, another clue is that when you see a massive sell-off like this, traders will start to take profit, and hence high chance this would be the end of the trend. So another example for you, can you spot the dojis? So you can see there's a triple doji over here, which means that traders are very indecisive. So of course a double doji would mean more uncertainty as compared to a single doji. And most importantly, when doji appears at extreme levels where your momentum indicators show you overbought or oversold, and in this case overbought, it would tend to be very significant. Okay, so you can see from here, high chance the price is gonna come down, and yes, it did retrace a little bit. And this doji is basically appearing at a random place, and there's no momentum signal, so we ignore that. And this doji as well appearing at a pretty random place. But if you draw this resistance over here, can you see that? Doji appearing here. For sure, this is a false breakout. The next candle that comes out is a bearish candle. Moreover, when the doji is formed, look at your stochastics, give you an overbought signal. So by now you should have realized that Some dojis are completely useless, just like some human beings. And also some people, they are useful people, just like how some dojis, they are useful dojis. Again, you see two very small dojis here. No signals appear in a random place, so we completely ignore that, okay? And like I said, remember to see where the doji is. If it is at the beginning of a trend, just like over here, you see a major uptrend over here, end of downtrend over here. So this is the beginning of the uptrend. And you see a couple of green candles, doji over here, doji over here. Should you take note of that? I don't think so, because dojis, if it appears not only in a random place but also at the beginning of the trend, it tends to be less significant. So basically what you can do is just ignore these dojis. Okay, another example. Can you see where the dojis are? So when you see a doji at the end of the trend, you should take note, okay? Especially when this trend has been going on for the longest time ever, and then you see some massive sell-off, a 90-degree drop, and then a doji appears, then you need to take note. And most importantly, this doji also appears at an oversold level, okay? And also this doji is resting at this support zone over here. Alright, so another example over here, you can see that the doji appears over here. So if I'm to ask you right now, is this significant or not? Think about this. Is this a significant doji? Let's look at where is it formed. Is it formed at a critical level? Is it resting on a resistance or support? Nope, not really. RSI is overbought, but you know, in an uptrend, overbought signals can sometimes mean that the uptrend is getting stronger and stronger, okay? But the most important thing is it is not resting at a critical level, okay? Even though it's pretty near at the end of the trend, but there's no massive bullish candles before that, so there's not really a clue to tell you that the trend is going to end. As compared to this doji over here, which is not super ideal because the upper wick is longer, there are consecutive bullish candles, and after that is followed by massive selling, okay? And at the same time, RSI is showing you overbought. Now this overbought signal will be significant, okay? It tells you that yes, the trend is really overbought. It's not because of the fact that the trend is getting stronger and stronger. Even for overbought signals, you might find false signals once in a while, which is normal. Some overbought signals tell you that the trend is getting stronger. Some overbought is telling you that the trend is dying. So this is the subjective part about momentum indicators. But once you have gotten used to it, you would be able to spot which are the false signals and correct signals. Okay, one final example over here. Can you spot where the doji is? Alright, there's one over here. There's one over here, resting at this trend line, and also 200 SMA. So there's a confluence. One doji over here, which is at this resistance line. So hence the price retrace from here. And this doji resting on the 50 SMA, but then momentum indicator is not telling you anything. So do you want to go in? But then for this doji over here, RSI is telling you that it is oversold. So this would be a higher probability. And your MAs are starting to slope up. 50 is above 100, 100 is above 200. So this is a good point to get in. Now I'll show more examples in the next video because there's a part 2 of doji. So I'll talk to you in the next lesson. Bye.